The economic toll of deadly earthquakes in Turkey this month is slowly becoming clear, with the World Bank estimating that the two initial tremors caused $34.2 billion in physical damage. Bloomberg Simone Foxman has more from Doha. Simone, put this number and the latest popular reaction in context.
Well, $34 billion is roughly equivalent to about 4% of Turkey's GDP in 2021. So this estimate is a little bit higher than what JP Morgan and Bloomberg Economics have estimated, but less than a local Turkish economic group are looking at. The World Bank saying that this is also going to result in a half a percentage point hit to GDP. Their initial estimate had been for 3.5 to 4% so far this year. We'll get our latest reading of Turkish GDP today as well, so watch out for that number, expected to slow already into the fourth quarter of last year. But remember, this isn't going to take into account the impact of these quakes. GDP growth, so important to President Recep Tayyip Erdogan's bid for re-election in May, but we're really seeing no let-up to the criticism against him, against his government, both for the slowness of the response and for building codes over the last couple of years. Football fans chanting in stadiums over the weekend, calling on him to resign, a rare protest, a rare, very public rebuke of Erdogan.
Then meanwhile, Bloomberg has some new reporting on more support for the country's stock market. How does the execution of this idea look like?
Yeah, great scoop out from our colleagues in Turkey. So the Turkish Sovereign Wealth Fund, TVF, we understand is going to allocate at least $1 billion, according to sources, to ETFs that are run by a state-run bank, Ziraat Bankasi. This $1 billion compares to the overall $220 billion of market cap for the Borsa Istanbul, and these ETFs track the Borsa Istanbul. Now, while $1 billion to $220 billion, that seems like a small fraction, this would actually be the largest support mechanism for the stock market so far. We'd seen previous efforts to get pension funds to put more of their money into stocks, but this, we understand, would be a bigger effort. Again, this is really a domestic play rather than an international one, because international investors continue to move out of ETFs and other things representing Turkish stocks. But the domestic investors, stocks have been so important because they've been using them as a hedge against inflation over the last couple of years.
And then in other stock market news, ADNOC Gas says it will increase the size of its IPO. So this goes from 4% to 5%.
Yeah, and $2.5 billion is the expectation of what ADNOC Gas will raise, putting it at a valuation of $50.8 billion. This is already expected to be one of the largest IPOs around the world this year. Robin Mills of Kmart Energy explains why there has been so much demand, and this demand driving ADNOC Gas to expand the size of its IPO, because he says this is really the closest you can get to upstream investment in Gulf energy producers. That said, I look at kind of this decision because they're not going to actually increase the price. They're just going to increase the size of the IPO. Is this a desire to monetize more of the asset while the getting is good over just increasing the valuation? Is this a play to make deeper markets to draw more foreign investors? Those, I think, are the considerations here as we look ahead to the expected start of trading on March 13th.